Axis Bank slips after it announces that the government will sell all of its residual 1.5% stake held by a Suti in a clean-out trade.
Lupin surges in trade after inline set of numbers in the second quarter. The margins recover from around 6% to around 10%, while sales in the US also see a sharp recovery.
Tata Motors slips after a very weak quarter where it posts a loss of nearly 1,000 crores versus expectations of a profit. The company also cuts margin and volume guidance for the Jaguar Land Rover business.
And it's a weak quarter for Deepak Nitrite. The profitability falls despite a rise in revenue as the margin slumps to around 13.8%, which compares with around 21%.
Piramal Enterprises reports a massive loss of over 1,500 crore rupees as stressed assets weigh. Provisions rise manifold while assets under management fall by nearly 5%.
Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me as always, Mangalam Malu. Well, Mangalam, I think we're at a crucial part on the Nifty. We are virtually at the low point of the day, but the 18,000 odd mark needs to hold out. And the first hour low you already have up for you on the screen. That's closer to around that 18,010 odd. If we have to see that buy on dips thesis play out, then, we need to hold on to these lows of the day. And keep in mind, second half of trade will be playing out weekly expiry. So that as well will be pretty crucial. That's about the index, so keep an eye out on that. But for the time being, let's talk to a couple of companies. J. Kumar Infra, well, they came out with set of numbers. Actually, it was a good showing for the company. Execution across project sites as well did improve. The company as well has an order book now of close to around 11,000 crore rupees as of September 2022. Mr. Kamal Gupta, the managing director of the company, joins us on the show. Hi, Mr. Gupta. Congratulations. Good showing from you. Well, what do we end this year with in terms of revenues? And give us a sense about FY24 as well. What kind of a growth can we look at out there?
Very good morning, Nigel. So we are expecting as we have given a guidance of 4,000 crores for FY23, but there is an uptick in the execution. So we are expecting a revenue of around 4,000 to 4,002 crores by the end of FY23.
Right.
And expecting a 15% growth for FY24.
Sorry, 15% growth in FY24, and you've upped your guidance from 4,000 crores to 4,200 crores is what you're saying. Just wanted to understand, moving a little away from the numbers, recently there was some reports that there was perhaps an income tax visit to your premises, etc. Can you give us some sort of clarity on that? Just wanted to understand what the nature of that visit was.
Absolutely. There was an income tax department search at premises in October. But this was in the normal course of business. So we have extended full cooperation to the authorities in the search proceedings. And the management is of the view that there will be no financial or impact in the company's balance sheets.
Has the department given any timeline by when you'll hear from them? You all believe that there's no problem, but an official verdict will definitely soothe the nerves of your shareholders.
This is, I think this procedure takes around 3 months time. So it's a normal course of business. So I don't see any issues, and we are very confident that there won't be any additional liability to the company. And
do you have any sense of what the contingent liabilities of the company are right now? And if this has to do anything with that?
No. This isn't anything related to that, Mangalam.
Okay, take that point. So thank you for clarifying upon that. So we will hear from the department in the next 3 months or so. The last time you joined us, as customers or citizens, Nigel and I were talking about possible timelines of execution of the Mumbai Metro project. You had said that line 2A and line 7 will be fully operational by December 2022. We are in November right now. Just wanted to know if that is still on track.
So Mangalam, this line 2A and line 7, which was partially opened in April 22. So the balance portion of that, from 2A is from Kandivali to DN Nagar, Andheri West, and 7 is from RA2 Andheri East on the highway. So these two lines, major works of construction has been over. So now the trial run is on both the lines, and MMRD is expecting it to put into operational by Jan 23.
Okay, all right. Mr. Gupta, if you could give us a sense, how is your balance sheet looking? And do you have any funding requirements? Because you're talking about big growth, but will you be requiring to tap the equity markets or raise some more debt?
So, as you know, we have delivered a very good, healthy quarter in Q2 with stable EBITDA margin and debt levels. So we had a growth of almost 31% in revenue in Q2 FY23, which is growth by 31% to 1,030 crores. Even the operating margin has gone up by 32% to 146 crores, and the PAT has gone up by 64% to 68 crores year-on-year basis. So we don't expect any fundraising in the near future, Nigel.
Right. Just wanted to understand, you said that while your revenue target has been upped, have you upped your margin target as well? Because, I mean, over the last few years, we've seen them meander around that 14.5% mark. Just wanted to understand, what would your margins look like by the end of this year? Because now costs are coming down.
So the costs are not coming down because, and if the cost comes down, Nigel, or if the cost goes up, like all our contracts are covered with price escalation clause. So wherein any rise or fall in the commodity price is been covered in the contract. So there won't be any impact on the P&L account. Right now, our operating margin is 14.4%, and we expect to maintain similar margins going forward also.
And what about your order inflow? I mean, the first half of this year, you've got what, close to around 1,700 crores. You've targeted 5,000 crores for this year itself. And I'm looking for, a couple of things that you've bid for. You've bid for the Kerala Metro, which is about 6,000 crores, Kerala Metro and Bullet Train. And the last time you spoke to us, you said that while your core is Maharashtra and NCR, you are also expanding to Chennai and Bihar. So wanted to understand, how much of these orders will come in the second half of this year? And what is your order inflow target for the next year since you've bid for these big projects?
Yeah, so as rightly told, we have secured 3 projects amounting to almost 1,700 crores in this financial year. And we expect a total inflow of around 4,000 to 5,000 crores by the end of FY23. So we have already bidded for around 6,500 crores, which includes NHAI's Kerala Elevated project and the HSR BKC station. There are a couple of more small projects. So, and we are sure to reach to these numbers of 4,000 to 5,000 crores of inflow by the year end. And we expect to maintain an order book of 12 to 13,000 crore by the end of FY23. All
right. Final question then before we let you go, Mr. Gupta. Tell us about the status of the subcontracting work you're doing for IRCON. What is the potential of work to come out from there? Put in a couple of numbers.
Sure. So this is not a subcontract work. It is a direct contract from IRCON. And this is costing around 1,068 crores, excluding GST. So this is part of the Vadodara-Mumbai Spur Expressway, wherein it has 4.2 kilometers of twin tunnel. The work is already started in this. We have already mobilized all our equipments, plants, and the work is physically started in this section. So we expect it to complete in around 2.5 years, the entire project.
And municipality orders, I mean, currently it's what, 800, 900 odd crores, MCGM. Is that increasing?
No, it is right now the same. So if we are bidding for this GMLR tunnel of 6,500 crores. So if we get that, of course, that MCGM part will go up.
Take that point. Thanks a lot for joining in and giving us all those details. Wish you good luck for the remainder of this year and also your long-term targets as well. That was the management of J. Kumar Infra. Meanwhile, just keep an eye out at the bottom of your screen. Some exclusive lines coming in from our correspondents, and this is with regards to the government mulling over improving the ease of doing business and perhaps increasing the investments as well. All in all, good for the macros if some policies to that effect do come by. But let's talk about some ideas for profit coming in from our colleagues at Money Control Pro. Bharat Jinani joins in with the stock.
We'll speak on Titan Company Limited. The company posted better than expected performance in the quarter gone by. Revenues grew 22%, driven by strong demand in the jewelry and the watch segment. EBITDA margins improved, driven by better product mix and benefits owing to increase in the custom duty on gold. The company expects the strong demand momentum to sustain in the second half. In fact, in the month of October, which was a festive month, the company witnessed 17 to 19% growth across the key categories. The company is gaining market share in the domestic jewelry industry, driven by the localization strategy. There is a good increase in the number of new buyers as well as healthy enrollments under the Gold Harvest scheme. The company is enhancing its store network in the domestic market. The company is also witnessing good demand in the international jewelry business. Apart from the good demand in the Gulf region, the company would also open its first store in the US market in the current month, which would drive the demand. The network expansion as well as introduction of new products would drive growth in the non-jewelry business. Titan has a huge runway for growth. At the current market price, the stock is trading at 63 times its FY24 projected earnings. Investors can add the stock in the portfolio.
Thanks a lot for that, Bharat. Well, let's slip into a short break. On the other side, let's get chatting with the management of Gateway Distriparks. Stay with us.
Back, despite some weakness in the overall markets, we're seeing some strength in a couple of pockets, and capital goods seems to be, the mover of today's trading session. ABB India, for instance, is up around 4.5 odd %. In fact, most of the gains have come by in just the last few minutes, currently at the high point of trade for that counter. And the other one which is actually doing well is Siemens as well. Siemens, for most part of today's trading session, whatever, from the open to now, it was trading in the red and now has moved slightly into the green as we speak, currently sitting with a gain of about 1/3%, but still has moved into the green. So that's about a bunch of stocks which are doing well. But let's also now get in the management of Gateway Distriparks. They reported their numbers yesterday, not particularly bad for their rail freight business, but it was the CFS business that dragged the overall revenues and the volume growth lower as well. Prem Kishan Gupta, who's the chairman and the MD of the company, joins in to discuss their second quarter numbers, but more importantly, the outlook for the second half as well. Thanks a lot, Mr. Gupta. Always a pleasure speaking with you. The first half of this year, overall volumes have been sub -3%, around -3%. Just wanted to understand what's the outlook for volumes for this year, both for your rail business as well as the CFS business?
Good morning, Magnum, and thanks for having me on the channel. See, overall numbers might be looking -3%. But if you see the rail business, that has gone up by 10% to 12%. CFS business, because we exited the leased property in Nhava Sheva in January 2022. So if you look, keep aside that, even in the CFS business, we have done well. And the volumes, which is showing a negative dip, in fact, for our facilities, which we are running now, on year-on-year basis, there is a 16% growth in that sector.
Okay.
So now looking at the second half of the year, the volumes, the imports are increasing, and we can see a slight uptake in the exports now in this month of November. October, there were a lot of holidays, so because of that, the production and the facilities and not made that much of production. But we see traction both in imports. Imports are going up in high single digit, whereas exports are picking up, say about 3 to 4%.
Okay, all right. Mr. Gupta, give us a couple of details then. For the year, what kind of volume growth can you see for the rail business? Some brokerages are estimating close to around 20%, point number one. And blended EBITDA per TEU, what should we work with? Should it be in the vicinity of around 5,300 or 5,500? Give us a number on both these two fronts.
Well, I mean, the blended revenue will be about, margin will be about 6,000 rupees for if you take on standalone, on consolidated basis. On standalone rail, EBITDA margins are over 9,000 rupees. Whereas in the containers side, it is 2,200 rupees.
Okay, so blended will be 6,000, right? That's what you're maintaining.
Yeah, blended will be 6,000.
And volume growth around 20% is possible in rail for the year FY23?
See, we have signed a SPA with the Kashipur terminals, which should close by end of December. If that kicks in, then the growth will be 20%. Otherwise, it will be still in double digit.
All right, we take that point. And on that itself, I mean, Kashipur is one of them. But apart from that, you also have announced, a capex of 250 crores to set up an ICD terminal in Jaipur, etc. as well. And this is over and above the capex that you've done in the past or you've announced in the past. So just wanted to understand what exactly would be your overall capacity and revenue potential once all the capex comes in and once, the entire dedicated freight corridor is done too?
Well, you see, the total capex that we have said in the next 12 months is of the order of 250 crores, out of which the Kashipur terminal is about 155 crores, and the other capex will be for the greenfield project near Jaipur. Now, this Jaipur ICD will kick in the next financial year only. So we, assuming that we get Kashipur terminal and we have a Jaipur terminal up and running, say by third quarter of next year, our growth will definitely be in high double digits, and even the revenue and margins will be to that order.
Okay, all right. You know, Mr. Gupta, when you come, we don't only like to talk about gateway district parks. We also like to talk about Concord. So a couple of details out there. One, are you interested in them? Will you be looking to put in a bid to buy Concord? Point number one. And also give us a market share of yours versus Concord. Go ahead.
Okay, so Concord is, we are not going to bid for it because our balance sheet does not support that. It will be a costly acquisition. And second thing is we are expanding on our own where Concord is already present. So we don't find any synergies by, going into those areas with them. So we are having a 17% market share in the NCR region, whereas Concord has 60% in NCR, and the rest of all is divided among other rail operators. In Saneval, we have 35% market share. So, we are leader in both the markets in NCR as far as private terminal container operators are there, and we are ahead of Concord in the Ludhiana market.
Right, we take that point. Just a couple of, if you could fine tune what you said earlier. You earlier said that you were looking to perhaps partner with PEs also, maybe to look at Concord. But now you're saying that your balance sheet does not allow that, and you're expanding in the same regions as Concord itself. So that is off the table. Just wanted to understand, with regards to your overall market share, you've given us a couple of geographies. On a national blended basis, what is your current market share? What is Container Corp's market share? And because you're expanding in those areas as Container Corp, I presume your market share would improve going forward, right? Do you have a target for the same?
Well, we have right now 9 locations all over India between the CFS and ICD. And these 2 partners that we have announced will add up to 11. And we are further going into some markets where the industries and the location where the business is there. I would not be able to give you a figure on a national level where we are compared to Concord, because they have 60 odd terminals, whereas we have only 9. But definitely on the rail side, we are much ahead of others. Concord being a big player since 30 years, more than 30 years. So they have multiple locations where we are not present, and we only go at the locations where the business is there, the profitability is there, and the networking effect helps us, with the hub and spoke model at our 2 terminals at ICD Gadi and ICD Viramgam in Gujarat.
Right. One question I wanted to ask you, because I look at your net debt currently, it's around 268 crores. Of course, you've guided for being net debt free going forward, etc. as well. But you have a stake in Snowman Logistics. You are the promoter of that company as well. Do you ever consider, selling that stake and perhaps focusing only on rail freight as well as the CFS business? Because that would immediately release about 270 to 300 crores for you.
Well, we had considered 3 years back, but the deal could not be concluded. And thereafter, we have invested time in that. We have not invested any further money. But now there is a turnaround in Snowman where, the revenues are higher, the EBITDA in absolute terms is higher. The percentage drop that you see in Snowman is because of some new activities which we have started with, which has low EBITDA margins compared to the cold chain. As far as selling, as of now, we are not contemplating that. But
Mr. Gupta, so as you said in the past, you'll try to sell it, and things are moving around for Snowman Logistics. If you get a good offer now, are you a seller?
No, we are not seller of Snowman right now, because Gateway on its own is generating healthy cash flows, and our debt is also going down. So if we have to borrow, we can borrow.
But what if a good offer comes, Mr. Gupta, an enticing one? Then will you sell?
Well, I don't have anything, Nigel, right now. So I cannot comment on that.
All right, we take that point. Thank you so much for joining in. And we understand that because Snowman Logistics is also a listed company, you perhaps may refrain from answering it. But you said that you tried to sell it about 3 years ago, and now things are on the mend for Snowman Logistics. Just keep an eye out on Snowman Logistics as a whole, as the stock. While it's meandering around the 39-40 odd rupees mark. From its IPO, it hasn't created a fair amount of wealth. In fact, from the highs as well, we've seen a big decline. So let's see what the promoters do with this asset itself going forward. Thanks a lot, Mr. Gupta. Always a pleasure speaking with you on talking about both Gateway Distillery Parks as well as Snowman Logistics as well. With that, we take a short break. On the other side, we get you more on the markets and individual stocks. Stay tuned.
Well, the index is more or less flattish, in the last 30 minutes or so. When we started off the show, we were down 120 points. We're still down 120 points. But a lot of stocks that are reacting to its numbers. And Deepak Nitrite, well, that's getting hit hard. Sonal is with us to run us through those numbers, which look pretty disappointing. Sonal?
Thanks a lot for that. A sharp fall on the stock today, and that is because the numbers were really weak for the company, and it is a continuous decline that we are seeing in performance as well quarter on quarter. Revenues overall declined 17% for Deepak Nitrite, leading to an EBITDA fall of 30%. Margins, they are down 900 basis points on a YY basis, and profits also declined 31% at 174 crore rupees. While the advanced intermediate segment did not do so badly, it was a good performance on a YY basis. Revenues grew to 685 crore rupees. The EBIT also came in at 140 crore rupees versus 128 crore rupees. It is the phenolics division which really did bad this time. So revenues there went up on a YY basis, but it was a sharp fall in the EBIT. It declined 55% on a YY basis, 45% on a sequential basis, and this is one segment on which the street was betting on big time, and that has not performed well, and that's why the disappointment. The stock is down 10% as we speak.
Okay, thanks for that, Sonal. Well, on that note, though, we'll have to wrap up on this edition of Chartbusters. You stay with us. Trading Hour comes up next.